Bismillahirrahmanirrahim. Assalamu alaikum. This is Vishal Ali, student of Sindh University campus Arka from the Department of Business Administration. This is a semester presentation of subject accounting which I am submitting to Sir Ghulam Mustafa Sheikh, who is head of our business department. My roll number is 17 and my batch is 2K19. So my presentation is uh, content on forms of business organization, accounting terminology, types of business, what is accounting and bookkeeping. So let's start with the first question. Forms of business. There are three form of business organization: sole proprietorship, partnership and corporation. Sole proprietorship is a business which is owned by one person. It is very easy to set up and it is very least costly. It is not costly like other ownerships. It is the least costly among all the ownerships, and it is usually adopted by the small business entities. Then comes our partnership. Partnership is a business owned by two or more persons. Partners are those who invest in their business and share and divide the profit among themselves. And general partnerships, all partners have unlimited liability. In limited partnerships, creditors are not allowed to go after personal asset of the limited partnership. Corporation's traditional name is joint stock company. It has several uh, owners and it is owned by means several persons. It comes into the existence under the company ordinance 1984. The owners are called shareholders or stockholders. Now let's move to the second question. Second question of my presentation is accounting terminology. It includes capital, proprietor, drawing, liabilities, asset, expenses, income, revenue, good, purchases, sales, balance sheet. So let's discuss all of these in a little detail. Capital means that amount or asset which is invested in business. Means it is amount which proprietor invests in his business. It can be either cash or it can be either in form of check. Also it can be in kind, means it can be building or land or furniture. Means proprietor can invest these kind of things like land, building as a capital, and he can invest in his business. Second, drawing. The drawing means the goods or money withdrawn from business concern for the owner personal use. Means drawing is a money that proprietor uses for his personal use from the business, and drawings will be deducted from the capital. Then it will be drawing. Number third, liability. Liability is amount that a person, companies owes, usually a sum of money. Means a money that business has to pay to outsider from which money has been borrowed. Liabilities are of two types: long term and short term. Long term liabilities are those which are payable after 1 year, and short term liabilities are those which are payable before 1 year or as 1 year complete. For example, as I'm going to tell you that we borrow something from creditor. Means we purchase something from creditor on credit, and the amount we have to pay before 1 year. Then it will be short term liability. That's why credit bills payable and bank overdraft are the short term liabilities. Then comes our asset. Asset, anything which has money value, it will be asset. Like your furniture, your building, your property, etc. It will be your asset. There are two types of asset. Number one is fixed, second is current. Fixed asset are those assets which are purchased to operate business, not for sale. or not for sale. Okay, so current assets are those which can be converted in cash in short term, like debtors. So debtors are the uh, persons to whom company sells products on credit. That's why debtors are our current assets. Then comes our expenses. Expenses and expenses accounting in accounting is the money spent or cost occurred by a business in their effort to generate revenues. Means it is a money, it is amount which are used to produce or sale sale of goods or services. Even your phone bills, your electricity bills are included in expenses. Then comes income. Accounting income is the profit a company retains after paying off all relevant expenses from sales revenue earned. Means it is an amount that is generated from the sale of goods or services, and from that amount expenses will be deducted, then it will be our income. Now goods are things which are bought to sold by business are called goods are those which on which company signs deal, or goods are those which are purchased to resell or purchased to manufacture finished goods. Okay, then comes our purchases for resale called purchases. Means uh, the goods which are purchased on which company signs deal, they will be called purchases. Purchases are of two types, cash and credit. When company purchases goods on cash, it will be cash purchases. When company purchases goods on credit, then it will be credit purchases. Then comes our sales. When purchases goods are sold in order to earn a profit are called sales. Means sales are is a thing on which company actually sale is a good on which company sale of those goods on which company signs a deal actually. So there are two types of sale, cash and credit. When company sells product on cash, then it will be cash sale. But if the payment of product is not been paid on the time of sale, then it will be our credit sale. Then and discount. Now concession or concession or rebate allowed by a business, its customer is called discount. It may be offered two types, trade and cash. First of all, we should clear the definition. Discount is a deduction in usual cost of any product or any good. It will be discount. Discount are of two types, trade and cash. Discount, any company offers discount on sale price of any good, it will be trade discount. And cash discount is a discount that company offers on early payment. Means for suppose company offer discount to his customers if they pay payment in 10 days, then they will be given 5% of discount. That will be our cash discount, mean discount for early payments. Okay, then comes our balance sheet. Balance sheet is a financial statement that reports company's assets, liabilities, and stockholders. Means assets, loss, investments, and all the accounts are shown in a balance sheet. So our question has been clear. Now let's move to the third question. So the third question of my presentation is types of business. There are three types of business: service business, merchandise business, and manufacturing business. So let's discuss all of these. Let's start with the service business. Service business provides intangible products with no physical form, which has no any physical form. It offers professional skills and other similar types of products. So for example, hair salons and schools, banks are the examples of service business. Then comes our merchandise business. This type of business products at wholesale rate and uh, it sell on the retail price, means they made profit by selling price at the higher price than their cost price, and even they don't uh, change the shape of the products, means they buy products for resale, but they sell those products at a higher price. This is the earning method in merchandise business. Example of merchandise business are grocery store, medical store, and other resellers. Manufacturing businesses, this type of business buy product with the intention to reshape that product and then provide to the customers. It combines it combines raw material, labor, and overhead cost in the production process. So the example of this type of business are textile companies. They manufacture, remanufacture products. First they buy products and they reshape that and then produce to the customers. So third question has been clear. Now the last question: what is accounting and bookkeeping? So accounting is the art of recording, summarizing business data to avoid you know difficulties, because when we do not record and summarize all the data of business, then we will feel a lot of difficulties. Even we may face dispute with the customers or our persons to whom we are dealing. So accounting is the art of summarizing and collecting and recording the business data, and bookkeeping is also a systematic recording of business data. But you know the purpose of recording and bookkeeping is almost same. Accounting and purpose of bookkeeping is almost same. Both are used for avoid disputes and difficulties in business, and it is very important for all business to adopt the accounting and bookkeeping systems. So thanks a lot. I have given my best, I have tried my best, and I hope for the best. Thank you very much.